Guess we're recording, huh? Alright, so in your packet that I just gave you, it goes along with, these books are set up where you have a work together and on your own for each section, and then you have applications, a mastery, and a challenge. And 95% of the time, we are going to do the work together. I will always put it up here for you, and we can work through them. So page 31 in your book is where I'm getting this information from. 31 in your book. And it says, write the answers to the problems in the working papers. I'm going to work you through them. And it's giving you all these different accounts. And it says, for each account, complete the following. Prepare a T account, label the debit and credit sides, and then label each T account using the following labels: increase, decrease, and normal balance. So this is just exactly what we just got done doing, but we're going to do it in here. So it says cash is the first account. So we write that down. It says label the debit and credit sides. Well, we know that debits are always on the left, credits are always on the right. Is cash an asset, liability, or owner's equity? Asset. So that means it has an increased side of what? Debit. Increased side means it's always the normal balance side, so I'm going to write NB. And decrease. So that's all you really have to do for cash. All right, the next one says accounts receivable, Christine Kelly. I'm really going to abbreviate accounts receivable with AR. Christine Kelly. Is accounts receivable asset, liability, owner's equity? Asset. So after I put the debit and credit, that tells me asset, so that means it is an increased side on the debit, decrease on the credit, normal balance is always on the increased side. I have supplies, debit, credit, and for that, supplies is asset, liabilities, or owner's equity? Asset. So that means it's just like the other ones. Increase on the debit, decrease on the credit. It looks like we have one more asset. Prepaid insurance. Debit, credit, increase debit, decrease credit. The assets are really, I mean, they're pretty simple because the assets will never make you think too much. They all, if it's an asset, they're all the same. They're all the same. Now you've got accounts payable. So I'm going to go accounts payable, Miller Supplies. Debit and credit doesn't change. Is accounts payable asset, liability, or owner's equity? Liability. So does the liability increase on the debit or credit side? Credit. So I'm increasing, normal balance, decreasing on the opposite. They give you another accounts payable. Wayne office supplies. Debit and credit we know. Asset, liability, owner's equity. It is a liability. the exact same scenario as the previous. Increase credit, decrease debit. And then the last one says Jeff Dixon Capital. I mean, capital's capital. They're just telling you that the owner of the company has a name, right? We still know it's debit and credit. Is the capital asset, liability, or owner's equity? Owner's equity. Is capital a good thing for your owner's equity? So what does that mean? Which side increases? Credit increases. Decrease on the debit side. Okay, so that's the work together. I'm gonna